Greetings, Dr. Jeffrey Scott here, and this is my Market MRI Pro update for Tuesday, 12/23/2025. First, I'd like to wish everybody a healthy, happy, and safe Christmas and New Year's. Hanukkah is over, so I've got two grandkids that have one Jewish parent and one Christian parent, and now they're so excited because now they get to have presents coming again. So I hope everybody has a great holiday season and still here safe and happy come January. I probably won't do a video tomorrow for family harmony. I think my wife's got some big plans, and I'll get something in over the weekend, that's for sure. Today was not a fun day. Um, it was okay, and net, not much happened in my portfolio. But I hate days when the market looks like it's up, and then I go and I look at my P&L, and it's like, and that was today. And typically that's a sign of concentration in something and bad breath. And I think that's what we saw with concentration in the mag stocks today. Let's just take a look at what we saw. So tomorrow we got some big news. I think today we had a big surprise on GDP. Sentiment a little weaker than people expected. So I guess there's no stagnation, but is there still inflation? And is the odds of a January or early in the year cut diminishing with that data? We got jobless claims in the morning, and the question is, will they slay Santa Claus? If we have a big um, number that are come with a low number, meaning less claims, that might spook the market again, because I think right now the employment narrative is what's driving the belief that we're going to have more cuts, which the market wants. Again, Jeffrey Scott, marketmripro@gmail.com. My Google group's called Top Down Trader, and my website's marketmripro.com. This is for educational purposes only. Anything I talk about should always be taken in the spirit of education, not investment advice. I do these videos to show people how I approach the markets using my own tools that are available. Trading involves risk. You alone are solely responsible for any investment decisions you make. I may own or intend to buy or sell any stock mentioned in this report. Trading stocks and options should be considered risky and should always consult with your financial advisors before making trades. And I've got tools in multiple platforms. And really, the big note is, and I mentioned it in the top down trader group, when I brought this to market, I don't think I priced it right. I talked about how it's very different between selling indicators and selling a complete trading system and platform. But I charged kind of like an indicator because that's what I'm used to. But as I looked at the marketplace and I've looked at my expenses, the price is going up. The price is going to go up from a base of 1995 for year one and 495 annually for data and updates to that starts year two to 2695. And I think that's more attuned to what a program like this would cost. In fact, there's many that are a lot more money that I've owned and I don't use. I am going to continue the Black Friday price through January 5th. And the reason for that is on December 30th, I'm doing sort of a public coming out to a large group that I've never addressed before. And I'm going to show them it's a 26.95 product, 14.95 through January 5th, and still will hope to maintain the 4.95 on an annual basis. So just to give you an update, if you have interest in purchasing it, just email me. The Google group's called Top Down Trader. I like it because it's my chance to communicate with a group of folks. I'll put things out there that I don't put on YouTube or anywhere else. We'll do some of our own education. We'll do some discounts from time to time on my tool set. Um, and you control who's in and you control when you leave. So just go to Google Groups, click all groups, find my group, Top Down Trader, join it, let me know how to contact you, how frequently. And oh, by the way, if you decide you don't like it, you can quit. No one can stop you. News and earnings tomorrow, big day for jobless claims. They're timely. If they come in high, that'll be interesting. And maybe that's the AI driven productivity, good GDP, and not great for the job cycle. Um, and we'll see. I do think if the number came in very low, it'd be problematic because with the high GDP that we got today, it might, and what we're hearing might be decent retail sales. It might spook some of the Fed heads. No big earnings this week to talk about. This guy I don't own. I don't know anybody does. I'm sure somebody does. Um, and next week, no earnings as well. But once we get through to the 6th, it becomes earnings season again. And it's a judgment call to hold stocks over earnings dates. It's bad judgment to not know when your stock's earnings date is scheduled. For more information about the product, about what I do, any questions for me, marketmripro@gmail.com. For Market MRI Pro customer support, coding at marketmripro.com, and consider joining the Top Down Trader Google group. For those of you that own the Metastock or the Wealth Charts products, TradeStation products, I trade exactly the same. There's some small feature differences, predominantly the scanner that I use here for top down. Um, but the approach to the market is exactly the same. And I hope to see folks at our live education event in Florida, probably late October 2026. Let's go take a look at some charts and the markets. The top four of the major indices, actually three of them plus volatility. Here's the fourth one. And the only one that was down was the VIX. So Spider is up 0.47, Q's up 0.47, Diamond's up 0.16. So modestly higher. SPYs and Q's closing near the highs of the session. All of them were negative at one point. Dollar was down another 0.33%, and Bitcoin was down just a tad at 0.88%. You can see weakening here where we went negative on the NASDAQ 52-week new highs minus new lows. The NYSE is staying positive. And when you look at these major indices, at the S&P 1500, the NASDAQ, and the NYSE, and you look at sectors, blue is today, gray is yesterday, you can see sectors are less positive, industry groups are less positive. And advancing stocks, 35% of the S&P 1500, 30% of the NASDAQ, 40% of the NYSE. So if somebody asked me, despite what we saw in the indices, it was a tougher day in the market. Now, you look at the sectors, nothing was more than 0.66 up or 0.48 down. Kind of a slow moving, maybe this was one of your low volume holiday type sessions. And if we look at the volume, because I looked at it so long ago, I forgot. Let me make sure that's done. And it shows me that NASDAQ was up 3%, NYSE down 14%. So volume, nothing special. Leadership, energy, communications, tech, utilities, laggard staples, which have been down now for a bit. You can see over the last week down 2.23%. Healthcare and discretionary, but again, nothing major. On the themes, cannabis, one day up, one day down. Over the last 5 days, you could see it's down 26% after a big run up, up almost 4% today. Copper was up, lithium, Norway, MLPs, oil, gas exploration, semiconductors, uranium, and what was lagging was probably solar. Solar was down a lot today. Um, Disappointing. I owned some First Solar and it popped up nicely today. And I'm thinking, should I take my profits? And the next thing you know, the whole sector blew up. CSIQ, Run, all came down. So you can see it wasn't a strong day at all. Now, if we go to the timing model, did it do anything to the timing model? No. We're still green here on the daily on all of them, the spiders, the Qs, the Russell, and the diamonds. Turns out when I enlarged this and tried to go one after another, and I said, oh, it didn't work. It's because Pervane didn't activate it here. I've asked him to activate it on this layout. If we look at the weekly, you're still going to see strength all over the place. And again, just a less happy session, a little bit less bullish today. But look at where we are. On the weekly S&P 500, the high was 688.20. And if we go back, 685, 689.25, 678, and what do we got here? 689. So we are $9 from all-time highs. If we closed here, we were at all-time closing highs. Hard to be down on markets that are doing this well. That's the spiders, the Qs, the Russell. All of them are just off all-time highs, and they all are green from a from a timing model perspective. We go into the indexes. Now I can do it quicker. I'm so excited. Thank you, Praveen. He's wonderful. So I hit it too fast. So excited. I did it again. One more time. There we go. Spiders. Beautiful uptrend. Strong day today. Closing at the highs. Good seasonality. Nothing's changed. I'd still be long. If I look at the Qs, same thing. Another super strong day today. Still have good seasonality. Closed at the highs. I'd still be long. Diamonds, ditto. A little bit off the highs. I'd still be long. The Russell was the one that was down today. And does it really mean anything? Let's see what it looks like. You know, a little bit of a spinning thing here. Still above the 17, above the 50 and the 200. 1 day weakness. I'd still be long. Volatility, this is maybe concerning, down 0.85, but a doji, does this mean it's going higher tomorrow? Well, doji doesn't define a reversal, but a doji suggests indecision, so perhaps you could see a reversal. And then what's been helping us is a weak dollar. Now, I'm going to have to talk to Praveen about what the right way is to display it. I got all excited when I saw it drop yesterday, and then I said to you all, that never happens. And then we looked at it, and it was ex-dividend. So probably should correct for that. I'll talk to Praveen. But you can see the dollar was down again. Isn't it cool? I can go one after another like that. Now, I noticed last night that it messed up my commodities because I don't have them going across, so I moved them. So they may look different than yours in order. Gold, all-time highs, closing at the highs. At some point, we're going to look at this, and I would have thought this here, climax run, and it's going to blow up. Not yet. Could be soon, but not yet. Silver, all-time highs, and boy, does that look like a climax run. That doesn't look sustainable, yet people keep pushing up their targets. I hope you're long some gold or silver or both. Oil, trying to get back in here. It popped out of this wedge, but now it popped back in, and now it's at the upper boundary. It'd be interesting to see if it can break out and go higher. So many different things moving. Venezuelan oil coming off the market more and more because of our blockade. Russia, Ukraine, when they fight, people worry less about Russian oil coming in, but if they have peace, that's going to flood the market. So I think oil is going to remain volatile, and look at where it's at, way down in its pattern. Natural gas spiked. Is that today's? Yep. Spiked today. Had what we thought might be a reversal candle here yesterday. Big spike today might be something to pay attention to. Looks like it wants to go higher. 10-year actually closed relatively flat. It tried going higher, tried going lower, and closed in the middle unchanged, still below the 200. And then the 30-year actually tried going higher and reversed, closed above the open, but still a down session. So nothing going on there. So I've got buy signals across the major indexes for daily and weekly. I don't see anything that says it's over. It certainly can be over, and that's certainly something we would be fearful that it's over, but it ain't over yet. And we'll see what happens with the data tomorrow. If we look at NYSE, NASDAQ, and S&P 1500 and Russell 2000, I'd say neutral market breadth. On the NYSE, it looks like we got some new highs. How cool is that? All-time closing high on the by far. Not the all-time high. This bar had a high of 22,174.94, and our high here is 22,162. So 12 points off all-time highs, but all-time closing high on the NYSE. All nice positive day closing at the highs on the NASDAQ, but not all is good. Why are we going up? Why is our stocks above the various moving averages turning down? That's a negative divergence. Um, New high, new lows, positive and negative despite higher highs. Um, AD lines negative on both, up down volume negative. And don't forget, we're just 3 or 4 days outside this confirmed Hindenburg-Omen signal here. I don't think we're out of danger. And I kind of am starting to feel like let's go back to, oh, well, Praveen, you got to change this one for me too. Let's go back to 21. See if it's going to go back for us. All right. I will have to, let me just change that to a 1. All right. This is kind of feeling like this. Not quite. All right. I'm a little bit worried about this. Higher highs, starting to see less stocks above the moving averages. We had Bangos, which we don't have yet. And then if we just move it one day at a time, which is hard to do, had a Hindenburg come in, a couple of Hindenburgs up here. And then I think we all know, and this was on the NASDAQ, so a lot of people didn't see it. But here was the NYSE coming in, and then boom, the bottom's going to drop out. And we had a pretty significant correction. So I'm a little bit nervous that this is what we're going into next year. Um, no one says 22 and 26 have to be the same, but notice how many years are apart. Both the same year of the presidential cycle, both making new highs at the end of the year, but with some concerns. Just a food for thought. If we look at market breadth, new high, new lows, the nice thing about selling off a couple of days is we have none of these things are high, 74, 65, 34, and 55. So the short term indicator that tells you if we have trouble from being stretched are all gone. Um, a little pullbacks in the AD lines, as you'd expect. Um, again, I don't see a signal to sell. I don't see a signal that come all in. I see the signal to be long, have cash, be nimble, and hope that this isn't the beginning of 22 all over again. On the sector timing non-ratio charts, um, we can see no new changes today. Staples is breaking down with the recent sell signal. Utilities have been weak. Healthcare has, hold on a second, what did I do here? Well, I know how to fix that. I go up here, put in 75 bars. Healthcare is in a sell signal. It's kind of just chopping around. And technology continues up higher. If we go to the key stock timing, and I use this mostly just to talk about some of the major stocks that we all follow. Amazon, about time. I had some options that I rolled 1 week ahead. I wasn't ready to get out of them. And they had a nice pop today. See, Amazon looks like it's ready to move. Apple, boy, has Apple been strong. A little bit of pullback here, nothing bad. Remember, this is the 30 WMA. The white one's a 21-day EMA. A lot of times I watch IBD Live and they talk about that being so important. I just laugh because look how close it is to the 30. I'll show you something even funnier, if funny is the right word. So we got the 30 WMA, the 21. Let's add one more. And let's add simple moving average. And let's go in and let's make it green to be consistent. And then let's not make it the 9-day, but let's go in and make it the 17. I've been trading for 30 years. I never asked this question. I mean, look how close the 17-day simple, the 30-day WMA is, and the 21-day EMA. Too funny, because a lot of people like the 17. That's what Ian taught us. 30 was a number that Stan Weinstein seemed to use a lot. And IBD uses 21-day EMA, and everybody, wants to believe that theirs is best. They're kind of all the same. But so it's broken down below the moving averages, but really hasn't done much. A little bit of consolidation after run up. This is what I think it's going to do, which is turn up like Google. What a great day for Google as well. Google and Amazon so far. Meta is a time to buy Meta on sale. A lot of people talking about that. Notice the buy sell signal went by multiple days ago. Netflix still in the same thing with Paramount fighting over Warner Brothers Discovery, but that's a bottoming candle. So this is one probably worth watching. Certainly a lot of talk about it. Tesla just off all-time highs, consolidating after a huge run up. Nothing wrong there. Nvidia, still my biggest position. I sell stuff against it. I kind of ignore it a lot. It's not in my model account. It's in my long-term money, which I don't trade very actively. Nvidia had a big day. And how many of you, like me, have Nvidia with net cost now after the split in the 20s and 30s? Um, a lot of us have this from a very cheap level and don't really feel the need to, I don't feel the need to dump it. I still think that this isn't going away. Microsoft, you look here, it kind of looks like it's turning around. It's got a new buy signal. It's above the moving averages, probably worth watching. Took a bath on some of those calls. Labu, this has been one of my big movers of late. We've been talking about biotech for months. Don't like the candle today, but look how many times it's done the same thing the whole way up. It's kind of what biotech is. Kind of an inside bar, probably doesn't mean a whole lot. We'll see what it does tomorrow. Pharma, that's a reversal candle, but pharma and biotech are very different things. And, every time you've seen that topping tail, you've had a little bit of a reversal, but really not that much. What else did I put in here? Data centers, struggling right here, did turn positive, but really has to show it to me soon. I think we saw most of those stocks weaken today. And then lastly here, the quantums, which had a great day on Monday, but gave back some today, but also in a recent buy. I think it's a great way of looking at things quickly. So I'm really um, pleased that Praveen did that for me. Now we're going to go into the JAS layout. So I'm a top-down guy, and I've got 3,700 stocks in my data set. So I am going to go into the top down. Each of these stocks are in a industry group and a sector. And we're going to see where the strength was today. There wasn't a whole lot, but basic materials, utilities, and you know, well, communications was relatively flat. Let's see the top 10 industry groups. On a day like today, when I really don't like what I got here, let's not do that. Let's just look at the industry groups themselves. Let's take the top 10. 1, 2, 3, 4, 5, 6, 7, 8, 9, and 10. 10 industry groups. That is only 50 stocks. Let's go down here and let's kill anything less than 5 or 500,000 shares. 26 stocks. Let's rank them by positive impulses. Let's just see if any of these look good. SOC, oil services. Well, I mean, look at the blue dots in here. Momentum, breakout, volume, gap, a CPR, relative strength and OBV looks good. What do they do? Are they three platforms offshore? Okay, that's interesting. That's going up here. Um, it still works that way too. Doesn't make any money. Some revenue, not that exciting, except it's a pretty exciting looking chart. Look at these two big days, a big gap up here. Is there news? Are they being acquired? California pipeline restart. All right, that might be worth reading about. Um, then, of course, you've got the lawyers. Well, I think it's something to look at and read. When I see a 68% move in lawyers, I'm not sure I would chase. This guy just won't go away. We've asked them to pull it from the data set. It stopped trading. Scholastic Corporation, boring name. I remember reading their magazines 1,000 years ago as a child, but they're still in business. That says something. Big run up, sideways move. Are they getting ready to break out? A little bit of volume. It's not my kind of a company. RELX. Um, too far down. METC. Coal, I believe. Now, coal is getting interesting because coal is becoming the new rare earth metal companies. So I don't know this one from Adam. Does it pay a dividend? Don't. It pays not enough of a dividend to matter. 4.47. Well, that's not too bad. Um, Not that exciting. We looked at BTU yesterday. I thought looked a little bit better than that. If you want to get in that space, ERO, copper, kind of looks like a gold miner breaking out new highs. Copper's been hot. Aluminum's been hot. CENX, probably too far for me, and it's at 100, so I wouldn't chase it here. Southern Copper, not as extended if you wanted to play copper as well. I look at this. Here's BTU. Let's just see what it looked like yesterday. We thought okay of it. Had a decent day today. Again, this is a stock that you're looking at not only coal and does it produce a dividend at only 1.44%, but are they the next rare earth companies that get invested by the US government, which would be interesting. So really, after a down day in the market, and we got big news tomorrow, I'm not that surprised that nothing looks great. So now let's flip and let's go from top down. Let's just look bottoms up at my two favorite scans because they never let me down. And I've had some great moves on that double momentum. So let's look at the A plus. Three of them. One doesn't count because it's no longer trading. Sobo, Energy, are they oil gas? Southbow, Energy, so construction, operation of pipelines. Kind of a new company, 2 years old, Canadian, pays a 2.47% dividend. There's a double momentum coming out of a squeeze. Relative strength and OBV look good. Too young. Let's be an IPO. Let's put the weekly for us to get, a high jump. And then TRP, DC Energy, another pipeline company, MLP, it sounds like, and it pays 5.83% dividend. Well, here's one that's in an uptrend, sideways moving a breakout, a double momentum, relative strength and OBV looks good, not extended with a big dividend. This one looks interesting to me, probably the only one so far today that I would be looking at tomorrow. And then the A stocks are another one of my favorite scans. You got that same Sobo, and now you got Zim. And Zim is a shipper that has put itself out to be bought. Didn't like the bids it got. Had a meeting of shareholders and basically said, because I read about the news today, we're doing strategic review, and the stock popped just because they're seeing something that might improve. Hard to get excited. This one um, pays a massive dividend. They pay a percentage, or the majority of their income comes out as a dividend. And during the COVID and post-COVID days, they had major earnings per share. And if it's going negative, the dividend is not going to pay that much. So, not a lot to love today. I think we got something going on in the market here, and I think we got to get through that data. PRP, and then you can't do anything wrong with some of the silver and gold mines that we've been looking at, one of them being AEM is one that I like. Small dividend 1.72 and really looks just as good as it did yesterday. So be good, be safe, enjoy the holidays. Reach out if you have any questions. And I'll make sure that I post that link for that December 30th call. It's going to be a different presentation than I normally give. And hope to see you there. Thanks, everybody. Again, safe, happy, healthy, and we'll see you soon.